Welcome. We are back. Pretty crazy 2 days in the market because I didn't stream last night, so I'm going to be covering what happened yesterday with the FOMC. And today we saw Fisker move after the earnings report after hours. Yesterday we saw PayPal and Coinbase come out with earnings after hours. Market's been selling off if you watched my last stream. That's kind of what I was thinking about, and I'm gonna explain that a little bit further. But tomorrow we do have, you can't see it's cut off, but we have Fubo and DraftKings reporting before the open. And then in terms of the economic calendar, non-farm payrolls and unemployment rate tomorrow. So we'll see how that affects things at 8:30 ET. And yeah, let's head over to the charts. If you're new to the stream, I'm going to be starting with Bitcoin and other markets. Then I'm going to be talking about stocks. So yeah, let's get into it. Bitcoin is still being very quiet, but I like the consolidation so far. You're flipping this previous area of resistance into a support. If we go over to the 4-hour, that ascending triangle I was looking at, it's not really doing anything. You kind of broke down from it. So I'm going to delete that for right now. And I'm going to extend this zone out and even lower it a little bit. So it's still, to me, as long as you can hold this 20K area, looks like a flip of the previous resistance into a new support after breaking out. So that's what I'm still looking for on Bitcoin. I like the two major lows off the PCZ of this 2.5-year bullish cipher after breaking out last week on the weekly, as you can see over here. So I think the stage is set. It might take some time, but as long as you can hold these areas, I have the same opinion on it. Ethereum's been doing a little bit better, bouncing. The Ethereum swing is up about 4% since I alerted it. It almost hit that first target. The same exact thing happened to AMC, which I had to market break even. AMC went up like 20% after I alerted it as a swing trade. The first target was 24% and then went all the way back down to the entry. That FOMC really kind of messed things up for a few of the swings. And then same thing with Ethereum. I mean, at the highs, it was up 13% since my alert. It just had to go up 15%, 2% away. Now it's pulled back, but not a lot of technical damage. You're kind of making a bull flag in my opinion. It's still flagging. You really haven't broken out yet, but it looks pretty clean. So hopefully you can hold that. Then we have the US 10-year, which is very shockingly not doing much after breaking a 2-month trend line. It's kind of going back up again, but still, if you can't get above this area, it could be looked at as a back test of the breakdown. You do have some classic bearish divergence playing out close to a shooting star candle on the daily as well, which is bearish. So I still think the technicals are bearish, but the macro environment is just holding this thing up, is just propping it up like day after day, which is kind of crazy. Crude oil looks very similar, but this could start turning into, or it might already be turning into, a little bit of a bear flag here short term. something like this. So keep an eye out on that. Then we have metals. Gold is for the third time now bouncing off of this 16, 17 support level. That's your short-term support. If that breaks, I think the next one's down like 1557. You do have some potential classic bullish divergence if you can hold these lows and start pivoting. And then silver bouncing off of the 18.87 support. So nothing too crazy. The dollar currency index broke down from this bearish ascending broadening wedge, and it went down to the next support, and it's bounced off of that. At this point, I think it could start to be looked at as a bull flag now. Something like this. It's another pattern appearing. If we go over to the 4-hour, the recent bear flag that I drew, you actually broke up from. I mean, you kind of broke down, went all the way down here, and then on the same candle went to close back inside the pattern, but it's kind of a new wave now, and we will see what happens there. And then finally, to wrap up the other markets, a very quiet breakout and back test for the Hang Seng Index. So it's been in a downtrend for quite some time now, but short term you are getting a very quick breakout. So we'll see what happens there. And yeah, let's head over to my thoughts on the market right now. If you watched my last stream, which was pretty much, we were right here on my last stream, I was bearish. I said I was short-term bearish because of this bear flag, because of a bunch of different variables. We had a bearish engulfing candle. We were at a resistance, upper Bollinger Band, the top of this black cloud on the daily. Volume was dropping. All the technicals looked bearish to me if you watch my last stream. And we have had now 2 days of pulling back. After that stream, you did break down from the bear flag. So that's kind of already been playing out. There's really nothing much else for me to say in terms of that. So let's talk about where we're at right now. If we go over to the 4-hour, you did gap down today, and then you kind of made just an indecision candle, and then you followed through in the afternoon with the 4-hour bearish engulfing candle. You also had that classic bearish divergence. I mean, it was set. Yes, we had the FOMC, which made things a little bit tricky. We even saw a very quick initial spike yesterday when the FOMC statement was released. Like, you did go up first initially, but then you sold off quite a bit. So you know, the technicals have been playing out, of course, with, you know, the FOMC bringing things down. But if we go to lower time frames, you are in a support zone. This 368 to 373 level, it used to be support, then it flipped into resistance. You consolidated here a few weeks ago, and now you're back in this zone. So you are at support. I think 368 is the bottom of this support zone. However, short term, you kind of finished the day with the bearish engulfing candle, and just, it was one large bear flag today if we just look at it like this. And you broke down right before the close. So like, this was literally your price action day. You gapped down, you made a bear flag, and then you broke down. You didn't even fully gap from the gap down on your way up. So that was really all that happened. Going into tomorrow, one key level I'm going to be watching was just today's low of day. If we go back to the 15-minute, you did have a tweezer bottom here around 369. So if we do head down towards 369 tomorrow, futures are kind of flat right now, but that level is going to be a key level I'll be watching. And if we break above 374, that's kind of this gap zone over here. So those are like the two short-term levels I'm going to be watching tomorrow. I think it's really just a question of, do you break above this zone first, or do we break under this first? So in between those two levels, I'm probably just going to be hands off, and then I'll just wait to see whichever one we break first. So that's really it. My prediction is see which way we break. We're in a zone, a big zone. We have a smaller zone short term. After breaking down from this pattern, let's see what Fibonacci retrace we're at. We're currently at the 50% retrace. So we're at common reversal areas. This was a very quick sell-off as well. I mean, we're down about 5% after the top of that FOMC candle. So it's already been quite the sell-off, especially. We had a negative 3% 1-hour candle yesterday, which is... that's actually insane. Like, that's very far from normal, and that's what you got on the SPY yesterday. So those are my thoughts going into tomorrow. We're in a little bit of a tight area. I just want to see which way we break. I think the major support is down in the lower 360s. You could see resistance here, support here, support here, support here. So overall, I think we can stay above this. Even if we test it, I think it'll hold. I'm not too worried about breaking under this for right now. If that happens, that happens, but that's not really something that I think is going to happen, at least short term. I think we'll be able to pivot at some point. Maybe, you know, this was a bear flag, and go over to the 1 hour. It was that. but maybe at some point you start to create some sort of a reversal pattern and then break that to the upside. Probably not tomorrow, but maybe next week. All right, so that's the SPY. If we look at the VIX, you're still around the 200-day moving average, and if we look at the past, you never have really perfect, I mean, I'm sure sometimes you have, but most of the time you don't perfectly reverse off the 200-day moving average. You go a little bit under it, and then you reverse. So I'm not too worried that the VIX broke it. I mean, in terms if you're looking at this as a bear. So you're just in that area where typically you go a little bit under the 200-day moving average, and then if you break up, it could be something that is quite interesting. So we will see. I think really breaking back above the 200-day moving average would be a bigger thing to look at rather than the fact that we're breaking down from it. The one very interesting thing though, however, is the market's been pulling back, and so has the VIX. Typically it's inversed, at least short term. And right now we're seeing them both sell off. I know there's some people that literally like study the VIX and like are very focused on it in terms of their trading. I'm not one of those people, but it is something that you should be keeping an eye on. All right. Then we have the small cap index, Russell 2000. It did start pulling back around that resistance area I was talking about. And you have some hidden bearish divergence now. So you got a rejection of resistance. I mean, I did this last stream. I said we already made a very nice move off the dragon breakout. You had this golden retrace, 200-day moving average, and previous zone of support all lined up at that area, and that's exactly, not exactly, but almost where you reversed that. You were a little bit shy of it. And then if we go over to the 4-hour, I charted this classic bearish divergence and bear flag on my last stream 2 days ago. Both of those played out. So now I'm actually going to do this. I'm going to make a new, larger pattern and take a look at this. If we change that demand line, you're kind of breaking down and back testing a new bear flag, a larger bear flag actually. So this is something that is a little bit concerning. You can also see this 177 level is very key short term. Look at these highs over here and this low, even this high over here, very short term level. I'll be watching this level tomorrow for small caps. And then finally the ARK ETF is also kind of looking like a bear flag. And again, this is what I was talking about last stream. Like we had this, and this is kind of the story everywhere. We had this very long period of a downtrend, and we finally broke out like 2 weeks ago. And we had a couple of nice days, but it immediately just turned into another bear flag, which is kind of been the story this year. You work so long to get a breakout for the bulls, and then while you're breaking out, you're creating a bear flag at the same time. So your breakout, instead of actually making a common retrace up to like the 618, 50% Fibonacci area, you're just making a little move off of the breakout and then you're selling off again. A good example of this actually is AMC, which I'll show you all right now. So if we look at AMC, which was a swing that almost hit the first target, but was a little bit shy of it. The first target was like right over here, and you can see it went up to here. It spent so long making this wedge, holding support. You broke out of it, but you immediately turned it into a bear flag. And yes, you did get you somewhat got a move off the breakout of the falling wedge, but that bear flag just completely overrided it, and then you're selling off again. This is kind of what's happening with the market as well right now. So those are some things to keep an eye on with the overall market. Energy has been doing well. Looking at XLE right now, let's go over to the daily actually. You did kind of test this breakdown of this rising wedge yesterday, but you were able to regain most of yesterday's candle today, but you still are under resistance. You're still close to breaking down. You still have classic bearish divergence. So I am still bearish on the XLE here. If you break above this resistance, then that literally changes. But until you do that, this looks like if there's any area where this might reverse, I think would be here. If we go over to the weekly, however, take a look at this. I don't even remember when I charted this, but on the weekly, you have this bearish bat. It's not perfect. This is a pretty kind of shallow D point. Even the BAD might be a little bit extended, but you can see from this major top in 2014, you're now making an 88% Fibonacci retrace. And this could be the potential type 2 move off that. You got your initial reaction. This was probably around the time that I alerted those, probably one of the best trades this year, those XLE swing puts and premium. You see you pull back there. But now you're kind of back at that same area. And this lines up with a top from 2008. So you can see like this is a huge level for energy. Energy probably has been the main focus for a lot of investors this year. Might be the best performing sector actually, I'm not sure. But this is the area where things look very different to me. It's been a great uptrend, but if there's any trend shifting technical to appear, it's literally where it is right now. So I don't know, whoever's studying all like the things going on fundamentally with energy right now, maybe keep this in your mind as well. But that is something I also want to mention on the stream. So those are the overall markets and everything. Now let's talk about some individual names. Start off with Fisker. If you didn't see it, I made a video that was posted on Monday, and it's about the same price as it was when I made that video. So not a lot has changed, but we did have earnings yesterday after the close. And this morning, Fisker opened down 9%. It was all the way down over here. You got a very big rally in the first couple hours of the day. You can see this from the low pretty much where you opened to the high of the day. Fisker rallied up 13%. Then it did pull back throughout the day after that initial move. But weirdly, that quick gap down and bounce back up has created a right shoulder for an inverse head and shoulders. So it becomes very, very simple here short term for Fisker. My long-term view is still the same. If you want to see my long-term technical view and even just updates on some news and stuff like that, go watch the video, the last video on my channel. But from a technical standpoint, this is so simple. Let's delete everything here, short term, 2 key levels, this and this, okay? That 848 level is your neckline of the inverse head and shoulders. The 732 level is your right shoulder. You are literally right in between them, okay? You break above 850, that is a bullish breakout. You break under 732, that is a bearish breakdown. So let me actually move these alerts. I already have one set up at 848. I'm going to set up one here. It's this simple. Just see which alert goes off first. Those are the 2 very key levels for Fisker right now that have been created over the past week. And it's right in between them. So there's really no way to know which one breaks first. The overall view, however, is still you're breaking out of the wedge. Might even be back testing a little bit. However, you're still under this zone. So it's mixed. You're testing a breakout of a wedge you've been in for a year. But it's very preferred or preferable if you were to be closing above this like 820-ish area, because look at all of these lows from earlier this year. So you were able to test that area today. Even in the morning, I messaged in the Discord that Fisker was making a nice red to green move, but it was at a make or break area. Wasn't able to hold up there throughout the day, even though it was able to get back up there after being at 730 at the low of the day today, which was the lowest price in about a week or 10 days. So you had a nice pre-earnings rally. You immediately sold off on the earnings, and now you're kind of halfway back up. So we will see what happens. The variables are mixed. You've got some potential hidden bearish divergence on the daily, this resistance zone, but those can both kind of be invalidated if you can break above that 850 level I mentioned. And that inverse head and shoulders looking structured maybe helps you do that. We'll see. But I think tomorrow and Monday will probably be very interesting days to see or to get more information. So it's probably going to be next Tuesday's stream when I'm able to kind of summarize whatever happens next. But yeah, that is Fisker. It's still like pretty much flat since the trailer. It was in profit, it was down. Now it's just kind of right around where this most recent swing trade. Then we have Tesla, which I don't know. At this point, I just look at this whole entire thing as a range. It's just kind of consolidating between 200 and 230. It's been doing that since for pretty much about the last month. If it breaks under this range, the swing gets stopped out. If it breaks out, there's not much resistance until the first target, so hopefully it breaks out first. But it is down about 2% since the alert currently, even though it was kind of halfway to the target on, this was Tuesday. All right, so that's Tesla, and then the final swing update, CLOV. I did warn about this. Again, if you watch my last stream, we talked about this on the 4-hour. Kind of looked like a bear flag over here. I did talk about it. Also, I said, the market was kind of looking the same, and unfortunately it did play out, and now you're pulling back down to not only your recent lows, but your all-time lows. So kind of similar to what I said about Tesla. If the lows break, the swing gets stopped out. It's that simple. Same thing for Tesla. If this major support breaks, swing gets stopped out. So we're just hoping that some sort of low can be put in above that. You did get 2 very nice long lower wicked candles around 137. You're only 5 cents away from that right now. We'll see if that can hold. That's really all it comes down to. These 2 highs are way too perfect to be aharmonic, but if we ignore that, it's kind of a mix between a Gartley and a BAT, but nothing official though. So It's got that M shape. Maybe you can draw out like some sort of a wedge here as well. You gotta hope that something helps it out over here because you break that support and there's none left. And let me see when the earnings are for CLOV actually. Why is it saying today? Somebody, I'm sure somebody in the chat knows. Somebody drop when the CLOV earnings are. I'm not seeing it anywhere. They usually sound like I get emails for like Fisker and CLOV when they announce their earnings dates. I could probably find it there, but I don't want to open that right now. But we'll talk about it when we get there. I'm sure it'll probably be the earnings calendar. Danny's saying the 7th, and me Tenderfoot saying the 9th. Oh, it literally says the 7th right here. The thing is, it's like, yeah, so it's the 7th or the 9th. Because trading views are not always correct, and sometimes they like change and stuff. So we will see, but those are your updates on the swings. Today we did have earnings for PayPal and Coin. Let's go to after hours. PayPal sold off about 10% after hours on earnings. It's down to $69 right now. I'm gonna put a purple line at where it's sitting at after hours. So it's pretty much around the lows of the year right now. So if it opens there tomorrow, that's probably the key level to watch. And there'll be a gap to fill and a resistance at $75, which used to be a support in 2018. And then Coinbase, big fake out ahead of earnings. It broke out of this triangle to the upside. It's not the cleanest triangle, to be fair, and then it broke down like right before the earnings. And if we go to extended hours, you did close 5% higher after hours. So you did have that happen. I'd say, I don't know, it's a little bit tough, but it's kind of this like very small zone right here. You really look into it, that's kind of the key zone between 60 and 63.5. You have a lot of lows and highs in that area. So it's been above it, below it, above it, below it. We'll see where it eventually ends up holding. And then AMC, I did have to mark it a break even at $6. It has gone a bit lower since I marked it a break even, but yeah, literally the swing probably somewhere around over here. It went up this much. First target was like right there, and then boom, it just got shot down. It happens. Can't really say anything about it. At least it wasn't a failed trade. Let's look at some other large caps which are continuing to bleed. Amazon another day lower after the earnings. We go back over to that weekly. I did talk about this on my last stream. You broke under that $100 level, which was key, and now you're already down to $89. The bottom of this zone I think is around the lower 80s. I talked about this as well in the last stream. Really, like, honestly, you can go back and watch my last stream and get a lot of good information because I looked at a lot of these charts and they're already kind of playing out. But around 83 I think is the next support for Amazon. Meta is at 89. It's really tough to do anything from a technical standpoint on Meta right now. It really is kind of in the middle of nowhere. You know, I'm sure a lot of these, if you pull out the Bollinger Bands on the weekly, you're at your lower Bollinger Bands, and that is very interesting because large cap tech at lower Bollinger Bands over the past 5, 6, 7 years, you got in a lot of big bounces when you're at your lower Bollinger Bands on the weekly, which you're currently back at on Meta, and I'm sure many others, not even just large caps, just stocks in general. We're kind of at the complete opposite as to where we were at the end of last year, which is interesting going into the end of the year. And then we have Google down 4% today. It's been getting crushed after breaking down from that broadening wedge, and also took out the $85 support. I think it's very close to this gap fill over here. There's a gap to fill from November 4th of 2020. We're back to where we were right after the COVID crash at $83 on Google. And then if that breaks, there's another gap to fill from October 30th, 2020 at $79.70 kind of. So we've got these levels we haven't seen in a very long time. I really didn't think I'd be charting these levels out anytime soon, but 2 years later, back to where we were. So it's very crazy. Microsoft down 3% today. I mean, wow, did these mini bear flags and everything play out? Just continuing to sell off. 208 is the next support there. Apple down 4% today. This like perfectly hit the second target of a premium swing trade before reversing. And now Apple is back. It has hidden bearish divergence almost confirmed on the daily, and now Apple is back at the biggest level on the chart, $138. Okay, highs over here, lows over here, apart from like this fake out. This is your key level for Apple. This is big. I'm really interested to see what happens here. If Apple was its own entity and I wasn't looking at any other charts and thinking about any other charts, just looking at this price action with an unbiased point of view, I think that this breaks down. I think it breaks down. However, we go back over to the SPY and it looks a little bit better. So like, it's just hard to imagine if the overall market heads higher, that Apple heads lower. I think they would kind of do the same thing. I don't think we've seen Apple underperform the overall market in a very long time. So I don't know. We will see what happens. But those are pretty much some large cap updates. And yeah, AMD I think had earnings like yesterday. It was up a few percent today. It's kind of just hanging on to this little bear flag demand line. Nothing too crazy there. So those are your updates. Pretty simple. I think a lot of the analysis this week was very focused on my last stream, and we're just kind of seeing everything I talked about in my last stream playing out right now. So I just want to give some updates on how things are looking. Doesn't look too different, but we are, again, this is kind of the major point I want to get across. We are pretty much in a support zone on the SPY, so I will be watching this zone tomorrow. If this zone breaks, then we go back down to the mega support. So it's like we already have like a mini support zone here, and then if that breaks, we have a major support zone. So I'd really feel that either this little support zone on the 1 hour, 368 to 373 holds, and if that doesn't hold, then we head back down to this 359 to 365 zone, and that can hold too. So two little zones. I think at least for a short-term reversal, we're going to bounce off of one within the next week. So just like I was short-term bearish up over here, I'm not ready to say I'm like short-term bullish again. We're still kind of in the middle of nowhere on the daily, but I think the majority of this short-term sell-off could be over, even if we had a little bit lower first. And then hopefully we get that Santa Claus rally going into the end of the year. I think it would just make things a lot funner. It's crazy. It's been literally like 2 years now that I've been streaming. It doesn't feel like that. It feels like 6 months. But from the past 2 years, I can remember like streaming around Christmas time is the funnest thing ever, because also coincidentally, it was a great bull market. And around Christmas time, we had some amazing moves in the market. So hopefully we get that again. It's just like the vibes are so good. But if the market's what it's been for this whole year, it's maybe going to kill the vibes. So I just hope that doesn't happen for the sake of the vibes. All right. But yeah, those are pretty much my updates. Thank you for watching the stream. If you didn't hit the like button, make sure to do so. Hit the subscribe button. Yeah, if you're not in the Discord, that link is in the description. Premium, everything, the free course is all there. Go check it out if you want to. I really don't know what's happening with timestamps tonight, so I'm gonna have to figure that out. But hopefully they'll be up soon. And I'll see you all next Tuesday.